Are gold companies earning a lot of money right now? Absolutely. The margins are as fantastic as I've ever seen in my career. Yep. Is that a warning sign that the price is too high and maybe costs will catch up, or are prices of gold still too low and they'll go higher from here? Right now you would have to say that just on that metric alone, gold companies are probably over-earning in terms of their profitability. When you then do the analysis and say, what does gold buy you? So what does gold buy you in real life? And we've done this analysis, we've shared it and things with
Don't
guys.
have this conversation with my wife, by the way.
And, if you want to go and buy a Big Mac or burgers or low-value goods, you can buy more of them today with gold than you could have done in the past. But if you want to go and buy a pretty standard item, say in the US, like a Ford F-150 pickup, you can't. You're buying less of that, even at today's gold price. So gold has preserved its purchasing power for some items. It hasn't preserved its purchasing power for all items, like Manhattan property, the average property price in Manhattan. You can buy way less of that. So has it kept up with everything? No. So therefore, on that metric, excluding the first one, it's not overpriced, because otherwise you could buy everything with less gold than you could have done in the past. And so I think, you've got to look at these different metrics to decide where the price is itself. But I still come back to this trend, and you mentioned momentum. Momentum is very important here. So maybe you have some speculators riding on the journey in the interim, causing volatility like we've seen today. And maybe some of this physical leasing is part of that. But actually the trend is probably your friend in this environment. And if we are going in this direction, hopefully slowly, we don't want to crash. If we are going in this trend, then where could it go to from here? It could go a lot higher if we're actually repricing paper currency relative to real assets, and there's an issue around people believing in it, then this currency aversion trade could last a while.
I mixed my commodities metaphors earlier and said that there'll be some splitting of the wheat from the chaff. But, with the debasement trade, does it worry you that it's kind of unspecific at the moment and this momentum is just driving at anything that isn't sovereign debt, that isn't currencies? And do you think that actually, Anna's talking about the silver bars and the shortage here in London, that actually, gold is the one you can rely on and some of the others will suffer in the future, the near future maybe?
I don't know. I've always said when I come on here that silver and gold are very different. Silver's an industrial commodity, solar panels and so on. Gold's a monetary commodity. And so they have very different dynamics that sit behind them. You look at the silver market today, there's something going on in the lease market. There's a shortage somewhere. Someone's paying to get hold of it to meet a commitment. That's all that is. It doesn't mean that the price is too high or too low or where it is right now. But I'm actually excited by the profitability of the underlying companies, which is what we invest in. And at these prices, these companies are earning like enormous margins, absolutely fabulous margins. Is that priced into the equities? And you might say, well, oh my God, Evy, the stocks are up 100% this year. How could they possibly be cheap? That's staggering. They've never been cheaper than they are right now. And we're starting to see the market catch up with that trade. I think last time I was on, I was talking about the average long-term gold price that people are using in their models was between 2,200 and 2,400. That's a big discount to today's spot price. That's like a 50% discount to the futures curve. That's a massive, massive difference. So the prices are now starting to be upgraded. So we've seen some of the sell-side analysts come out and say long-term pricing should be 2,800, 3,000. That's still a big discount to spot and a massive discount to the forward curve. So when you look at all this together and you say, well, what's priced into the equities? What's priced in is a massive retracement from today's prices. And if that doesn't happen for 12, 18 months, 2 years, these companies will way over-earn relative to expectations.
I also want to ask you, back to London Metals Week, what the vibe was when the Trump tariff threat came along on Friday night. Was everybody in town? Did it kill the vibe? Did it change your thinking strategically at all?
Great question. So it doesn't really start until Sunday. So it wasn't really much of a kind of atmosphere to engage with people there. So I think by the time we got to Sunday evening, J.D. Vance had come out and said things to kind of soften some of the volatility. Hence, we didn't have the big move on Monday in equity markets that was priced in on Friday night. So I think that comment had kind of calmed things down a bit. Yeah.
Gold always crashes, doesn't it?
Does it?
That's what history tells us.
You're the man with wisdom. Right?
No. But I look at the long-term chart. It always goes up and then it comes down pretty hard.
Well, I think everything goes up and everything comes down and everything goes back up again, and that's a cycle. So, but I think what we're in right now is it's probably bigger than a cycle.
Yep.
Yeah, because we've got this. We've got this enormous trend that's been with us now since the 1950s, the overprinting of paper currency, and this growing social liability. And I think it's so hard to break away from that. And eventually these things get to tipping points. And when you get to a tipping point, then things change, and maybe we're seeing a change in some of these real assets on the back
When
of
you
that.
get to a tipping point, things change. Wisdom from Evy Hambro.